everybody. Welcome to our podcast. We have a very special guest today. We have my good friend Zhao, who is the president of NYDIG, and I'm very excited to be chatting with her about everything and anything related to Bitcoin, blockchain, and all the wonderful things that she is doing. So Yen, perhaps what would be great is if you gave us an intro about yourself, your path to Bitcoin, and just all the fascinating things that you've been working on.
Yeah, absolutely. Thanks, Eugene, for having me. I'm so glad to be able to join you on this podcast. And, I wish I were one of those people who could say I was in Bitcoin since 2012. Unfortunately, I am just not that good. I started my career very conventionally. I was a trader at Morgan Stanley out of school. And then a few years after that, one of my coworkers at Morgan Stanley, a gentleman named Robbie Gutman, called me and said he was starting a new asset management company with another gentleman named Ross Stevens in New York, and would I like to talk to them and see if I wanted to join as well. So that sort of started my path at our parent company, which is called Stone Ridge, in 2012. And actually, I think from the beginning, Ross and Robbie were both big Bitcoin fans. Robbie has told the story of how I think this was maybe in 2013, he bought Bitcoin off of Craigslist on a street corner in New York. So as we, as we built our asset management business, one of the things we've always had an eye on was building an asset management product for Bitcoin so we can have more people access it. And in about 2016, 2017, we thought, all right, let's really go do this. Let's go find service providers who can custody the Bitcoin and let us execute. And we'll pass all the EY audits that we had and make regulators comfortable. And we looked for all the service providers and couldn't find any that really met all the requirements. So we ended up having to build our own 100% cold storage solution, which we did, and build our own execution capabilities, our own accounting and valuation capabilities. And that was really the genesis of NYDIG and what we've been doing. And I hadn't been really involved. I was building another fintech business at the time. And I joined NYDIG a few months ago. And I really, when I first joined, I think I'm probably like most people out there who are thinking, gosh, Bitcoin, like I've read about it in the newspapers. It seems really interesting. People are buying it, but I don't really understand how it works. And it feels kind of scary. What is it? So I did a lot of reading and a lot of talking to potential clients. And I think, really realized two things that weren't obvious looking from the outside. And I think, Eugene, you've been in the Bitcoin space for a lot longer than I have, actually. I would love to hear your story. But, when I really spent a lot of time in the world, I realized, one, especially in this backdrop of like basically unlimited government money printing and inflation concerns, just having Bitcoin with a very, very sound monetary policy that can only be 21 million Bitcoin ever in existence, that really is genuinely very attractive. And then the other aspect is when you look at the institutional players who are coming into the space and investing in Bitcoin, it like the people who are public is just a small percentage of all the people we're working with and talking to, and the level of diligence they're doing is really extensive, and what they're expecting is a true professionalization of the industry, which is here. So I think what I realized was Bitcoin is really not sort of what people thought of Bitcoin 5 years ago or 10 years ago, and it's really grown up and matured. So that's what we're doing. Really, we provide Bitcoin products and services to institutional partners.
It's interesting you're talking about the institutionalization of Bitcoin. I think that's something that we're seeing, happen more and more. Of course, we have MicroStrategy really kicking it off as at least reportedly the first public company that was very public about its using its balance sheet capital to purchase Bitcoin, and of course even issuing securities to affect that purchase. And of course, you have Tesla and a bunch of other companies that have followed suit. I'm curious how you talk about players that are not public about it, right? And that could be anywhere from, other companies maybe that are more private, all the way to even central banks. And it'll be really interesting to think about what happens when, of course, central banks very publicly actively get into the space. So I'm curious how you see that that space evolving, and your role and NYDIG's role in making that even more mainstream.
When we started NYDIG a few years ago, I think we had a hypothesis that people would be interested. We just didn't know how long it would take. And over the past few months, it's really been stunning to see the acceleration of interest. And I think at first it was probably more the asset managers, asset allocators, like family offices, ultra high net worth individuals, people that you would expect to be really looking for alternatives to stocks and bonds and sitting in cash. Mm-hmm. But what we found to be really interesting are corporations who are allocating for their own balance sheets, including, Mass Mutual, right? They invested in Bitcoin through us on their general accounts. And you think, gosh, extremely highly rated life insurance company investing in Bitcoin. That's not something you think of every day. Nope. And there are other insurance companies, the PNC companies, and like you said, publicly traded companies, and very, very traditional financial services companies that you wouldn't think would be first movers in asset classes are getting in. I think, one of the aspects is certainly customer demand. Private banks have told us their customers are really, really, really interested in Bitcoin, and so it's really sort of contradicting the thesis that, gosh, only like young millennials in San Francisco are interested in Bitcoin. It's not true. There are lots and lots of private bank clients, lots and lots of 30, 40, 50, 60-year-olds are interested in as well. Mm-hmm. And then the other is, insurance companies was really interesting. If you think about anybody who has a long-term view of assets and returns, it's life insurance companies. And when they think about it, I think one appeal is the day-to-day volatility of Bitcoin is less important than thinking about what is this going to do for you and your policyholders over the next 3-4 decades, right? So it's just a very different investment thesis, which I think is interesting.
I wonder, I'm sure every institution, every player is very different. Of course, diversification is one of the first rules of investing. We haven't had the kind of history in Bitcoin and cryptocurrency overall. We've only had, something like a decade relative to equities and, even bonds, where you have so much greater of a history. And you can look back at the correlation between, commodities or even gold versus, fiat money or other asset classes like equities and bonds. Cryptocurrencies are interesting because in many ways, it certainly isn't exactly tied to, for example, equities, but there have been times where, for example, last year, where the correlation seemed to, mimic like high beta stocks, right? And there are times like this that occur, but one has to imagine that the correlations will diverge as time goes on. I wonder, are people thinking about this because they want to own digital gold? Is it simply they want to own another asset class like real estate and commodities just to diversify their portfolio? Is it all of the above? I just be so curious about what the sort of rationale and how people are thinking about this from an asset class perspective.
Yeah, absolutely. I think you've named a lot of the rationale that people use, and we've heard a number of others. So I think digital gold certainly is a narrative that a lot of people believe in and like, and I think it really comes back to that scarcity, that hard money, right? Gold, even though there is potentially a lot of gold in the ground, historically it's only been growing in terms of overall supply, 1.5 to 2% a year. So it has stayed pretty scarce. And that's really valuable versus fiat, where people can just print trillions of dollars at a time.
Yep.
And I think Bitcoin's limited number of 21 million Bitcoin, that's really appealing to people who really believe in the value of that. And if you look at, gold's history, even after, in 1971, when the US dollar was no longer backed by gold or any other reserve assets, I think people predicted that gold's value would decline because people thought, well, part of gold's value was because it was a reserve asset for US dollar rather than the reverse. And since then, US dollar has depreciated 98% versus gold. And so, I think there's genuine value there. And our executive chairman and founder talks about the importance of having a hard store of asset like gold or even better like Bitcoin, in terms of money as a technology for turning your wealth today into consumption tomorrow.
Definitely.
And if that technology is not a good technology, then your wealth today doesn't stay. And so you're not incentivized to save and to build and to grow your asset base. You're incentivized to spend really quickly. And that's really bad. So that's definitely an important one. I also think another really important one is just thinking about it from a purely quantitative perspective. I think we talked to a lot of finance professionals who really like Metcalfe's law, right? And so Metcalfe's law is that the value of a network is essentially proportional to the square of the number of members in that network. And so if you think of Bitcoin as a network where if there's one person using Bitcoin or having Bitcoin, it's not very useful. But if there are a billion people who use and have Bitcoin, it becomes exponentially more useful. I think that's been a very, very interesting model. And actually, if you do the modeling, it's been fairly predictive in the past. So I think there's certainly an interesting way of looking at it. And then the other, when we think about correlations, you're right. It's tough. Like it's tough to do correlations for an asset class that hasn't been around for a really long time. And how do you think about that? And a lot of our firm, they're quants, and they think a lot about data mining and how reliable are the results. So I think we often also go back to, well, we should invest in an asset class that the fundamentals make sense. So, I used to run a reinsurance fund, and the fundamentals there is insurance companies and reinsurance companies make money on average over time because they are bearing the risk of a sudden catastrophic loss of individuals and companies, right? And so because they're taking that risk, they deserve to make money over time, which to us makes a lot of sense. For me, the Bitcoin as digital gold definitely makes sense. As store of value makes sense. There's also do we believe that the future will be more digital? Do we believe that the future will have increasing interest in and have a massive one-way trend in a open source internet native monetary system? I think yes. And I think a lot of people think yes. So I think that's another way to look at it.
I think the one interesting thing we talked about with central banks, and you brought it up with, the peg to gold. And of course, there are lots of examples of people pegging to what is currently the reserve currency, the US dollar, countries like Argentina and other things. And we can sort of talk about what that was like, to try to peg to an asset that you can't control. If you're the Central Bank of Argentina. But there is, people talk a lot about inflation nowadays, and we talk about where the good old days of when fiat like USD were pegged to gold. Do you imagine a future where you have currencies pegged to something like Bitcoin or maybe even Bitcoin itself? And what does that kind of a future look like? Like, how do we even imagine what that could be?
Yeah, no, it's super interesting. I think Look, I am not an economist or a central banker. I think it's tough to go back to a pegged currency when you don't have a pegged currency,
Mm-hmm.
because the central banks have so much more freedom when there's no peg, that to like sort of put them back into a constraint seems hard.
Mm-hmm.
You know, there could be a world where it would be an interesting world where currencies are actually pegged to Bitcoin. I think there certainly needs to be much more adoption and probably more stability, and which we would expect. As there's more adoption, we expect there's less volatility.
Mm-hmm.
That would be really interesting. You know, one thing that again, our founder talks about, which I think is really interesting, is he's almost changed. He has changed his mindset to think in terms of Bitcoin rather than think in terms of dollars.
Mm.
And you know, Eugene, I know you're very much into philosophy,
Mm-hmm.
and thinking of, and you know, we have discussions of like, you know, what is real, and like what is perception versus reality, and how do they affect each other. And it's interesting that like, because he thinks in Bitcoin and his perception is Bitcoin, like a lot of things are different, right, about the world. And so I can imagine that could be a future as well, right, where more and more people start thinking in Bitcoin, and that just becomes a different kind of monetary system.
Definitely. Definitely. What a future that would be. Just so many interesting things to think about with the implications of that. I'm curious, we've been spending a lot of time talking about Bitcoin. And of course, there's a whole world of other coins out there. And I'm curious, NYDIG is particularly focused on Bitcoin. You know, there's the upcoming Bitcoin ETF, which is very exciting. We can obviously talk about that. But maybe just at the highest level, what's the background of NYDIG's focus on Bitcoin over, let's say Ethereum or, a whole host of other assets that you could be interested in?
Yeah, it's a great question, and something we talk about a lot. I think, from a purely commercial perspective, frankly, the vast majority of conversations we have is about Bitcoin. Just most institutional clients and partners have the most comfort with Bitcoin. I think, there are certainly thousands of cryptocurrencies, as you said, but Bitcoin obviously has by far the largest market cap. It has, a tremendous amount of spend on its network security, which is very, very valuable, right? And people say, well, is it a feature or a bug that it takes so much energy and so much spend to secure the network? We think it's a feature. When you have a store value that you want for decades and decades, you want that security to be extremely high, and we think it is, and we think that that's fantastic. And not every coin has the feature of only having a limited number of coins. And there's, I think, most regulatory clarity. Of course, it's, various bodies have talked about and opined on Bitcoin, and we think they're just most regulatory guidance on that. And so that's what we're most comfortable with. We also think that as a store of value, it's the best protocol that we've seen that does that. There are other things, like Ethereum does other things, and that those other things could be interesting. I guess we haven't necessarily seen any application that can't ultimately be done on Bitcoin if people wanted to. But right now, we think the store value narrative is very powerful.
We talked a little bit before about Bitcoin being digital gold, and I was lucky enough to be in this sort of Zoom webinar with Bill Ackman from Pershing Square that was hosted by our alma mater, HBS, of course, where you and I met, Yen. And the interesting thing, there was talk about digital currencies and Bitcoin. Interestingly, Bill's not much of a Bitcoin fan, and it's a bit sad because there's a lot of people I admire, like Warren Buffett, who isn't, who called Bitcoin, I believe, rat poison squared. So definitely a lot of doubters out there, many very smart and very accomplished investors and just smart people in general who doubt the asset class. So, do we think of Bitcoin as digital gold? Gold has, of course, industrial uses. Bill Ackman made a great point that, you can't DCF Bitcoin, right? Like what's the discounted cash flow of Bitcoin in the future? And whereas, you buy equity in a company and of course, a company can be DCF'd. So what's the right way to think about this? What are, at least some of my heroes, what could they be missing? And do we think about this like gold, or do you think about it completely differently?
They're very smart people, so I hesitate to say they're missing anything. And this is just my perspective. I think there are two things that make me very bullish on Bitcoin. I don't know if it resonates with other people, but I'll just share. Mm-hmm. So the first is almost sort of like it's sort of an upside downside view. So if you believe that Bitcoin's not a thing, then it goes from 50 something thousand down to zero. Mm-hmm. If you do believe Bitcoin is a thing, then I think the upside is far, far, far higher than doubling, because we have 50, 100 million users of Bitcoin today. Even if you assume it's 200, 500, a billion users in the future, that's a dramatic impact on the valuation of Bitcoin. So to me, there's an upside downside argument. The other is, again, sort of coming back to sort of, big macro trends. So I remember in May 2016, a pretty well-known venture capitalist thought that Amazon was undervalued. And there was a lot of articles written about this. And people were like, what do you mean Amazon's undervalued? Like, this is 5 years ago. Amazon was very prevalent. Everybody had a Prime account. I think you were, Amazoning toothpaste to our apartment at the time. So, very prevalent. And, everybody used Amazon every day, and many businesses were already using AWS. And despite all of that, he argued that people underestimated the impact of Amazon's core retail business and of AWS. And so at the time when he said this, Amazon's market cap was $317 billion. And now it's 1.7 trillion. So more than 5x increase in 5 years. And I think and I think he said that because he identified that internet retail was a massive one-way trend, and cloud computing was a massive one-way trend. And from a personal perspective, I'm certainly not an leader in innovation and technology. Because I remember when I first had the internet, when I was like tiny, and when I got on the internet and I was browsing around, I was like, there's not much to do on here. Like, what do I do, right? There isn't that much. And then, people are like, oh, you can buy things on the internet. I was like, who wants to put their credit card on the internet? That's crazy, right? And then little did I know, 10, 20 years later, that the whole world has changed and everybody's doing all these things, but people are doing things on the internet that you would never expect. And I sort of see that sort of same trend for Bitcoin, where people are thinking, gosh, like store of value or like digital gold or digital, like, why do you need that? Humans are extraordinarily creative. I don't think we're going to get less digital over time. And just because I can't imagine what people are going to build with Bitcoin or on top of Bitcoin does not mean that there won't be a flourishing ecosystem that comes from it. And so what we're trying to do at NYDIG is trying to have technology infrastructure that lets really anybody plug into Bitcoin and provide Bitcoin products and services, because we really think that people are very creative and will find things that are powerful. So I sort of think of it as like there's a big macro trend there that I believe in.
I think the Amazon analogy is actually so relevant, because a lot of times, we get myopic, at least I know I do, working in an industry or thinking about something that's right in front of us, and, realizing, there are billions of people on the planet, and we think about the adoption rates. And oftentimes when you're in an industry, you see things in a certain way, but it could take years and years for that to develop. And in many ways, it's hard to call, but we're probably well before, mid 2010s Amazon, where we are with Bitcoin, right? I mean, how many people, we're looking at the Bitcoin wallet addresses and the number of them, they're obviously going up, but it's interesting to think about, well, how many people actually, operate their, actually hold their own private keys, right? And how many people, have their Bitcoin off exchanges, and even just looking at exchange growth. I mean, it was amazing to see the Coinbase IPO and seeing how fast their business has been growing, right? Even just in the last few quarters, it's just really fascinating. So it's all speaking to both retail and institutional adoption that in many ways is only just beginning. So, one of the key things people talk about a lot, of course, is the volatility, both up and down, right? I mean, many years ago, Bitcoin was, dropped from, went from, around 20,000 to just a few thousand. And then before, of course, after and languished there for many years before going up to where it is today. How do we think about volatility in the space? And it's, if you think about it, as an asset class, and think about its, if you were to think about its, for example, beta, if we were to use that imperfect analogy, it seems like it has a pretty high beta relative to a lot of other asset classes out there. So I'm curious what your thinking is on that, and how institutional and retail investors should navigate the immense volatility of the space.
So, first, that as Bitcoin has matured, its volatility has certainly declined significantly. And I imagine that'll continue to be true as we go forward. The other thing that I found interesting was actually Bitcoin's realized annual volatility is not that different from certain large publicly traded stocks in the S&P 500 that you can probably guess what does that stock might be. So, it's certainly high, but not unprecedented. But I think for me and for a lot of investors, what I found interesting about the Bitcoin community is the idea of hodlers. Like, it's ingrained in the community to buy and hold. That's just so different from sort of speculative investing or gambling or whatever else that people are doing in other asset classes. And when you think about volatility, I think it matters more if you're not a hodler, if you're trying to trade around, and if you really need this Bitcoin to live on day to day, and you need it tomorrow. I think if you're a hodler, and if you have a little bit of a longer term horizon, at least for your Bitcoin allocation, or if you're an insurance company with a very, very long term horizon, I think, ignore the day-to-day volatility and think about the long term sort of point to point potential returns. Obviously, you can't do that with your entire portfolio. You can't turn all of your cash into Bitcoin, and because again, you need to live on it. But that's what I think about. I think about sort of a long-term view.
I am reminded of a John Maynard Keynes quote, which is the market can stay irrational longer than you can stay solvent. And to your point, as long as you don't need it for solvency purposes, then the long-term view is always the right way to think about it. If you can actually do that. So another topic, of course, that is of prime interest is there's just all this debate about Bitcoin mining and energy consumption and things like that. I'm curious what your perspective is. There seems to be a lot of discussion around this, and it is actually a topic that is fraught with a lot of really, I would say, strong feelings from a lot of different sides. So I'm curious what your perspective is on it.
A couple of different aspects. So the first is, if you just look at the history of technology, better technology that helps humanity generally require more energy. Like, cars require more energy than horses, and having, electricity requires more energy than not having electricity. Right. I remember when I was back in China, like 15, 20 years ago, nobody had air conditioning. And it really sucks to not have air conditioning when it's 100 degrees outside. And thank God there's air conditioning. And I I think that was a great invention because it reduced human suffering and deaths and lots of other things. And so I think one context is, yes, I think it is possible that Bitcoin uses more energy, but it is also, we think, a better technology for what it does, which is store value. And so in an absolute sense, like, honestly, maybe it should have more energy. Now, on the flip side, I'm actually not sure that Bitcoin does use more energy than, say, fiat or many other systems, right? If you think about how much energy there is to keep the banks and the payment rails and all of that, or how much energy is to mine gold, and you think about how much actually renewable energies is already being used in Bitcoin mining and will continue to be used, I think that's powerful. And to that point, if you think about it, like, Bitcoin miners are, they're profit seeking, right? They want to find the cheapest, best form of energy so that they can make the most profits. And I think that they can be an amazing driver for using more renewable energy. They can load balance energy grids in a way that really no other application can. And Bitcoin mining is like, probably the only use of energy that doesn't require it to be located near human civilization. Like, you don't need to have a human settlement to have profitable Bitcoin mining there. So hydropower and all kinds of other power in remote areas of the world can now be tapped in a really efficient manner. So, I think there certainly is a world where Bitcoin could actually be great for the environment.
One of the concerns, talking about security and the security asset class, I mean, what's amazing, I think this was even, it's been pointed out by a number of people, even Bitcoin detractors, is, the asset class has proven itself out over, many cycles already, right? Where you have these big bull runs and, sort of having the asset class languish in a bear market for some time before going back up. And through all that, we've had, the security of the underlying asset class. Now, there's obviously concerns related to, far in the future, things like quantum computing and sort of being able to, break RSA one way or another. But perhaps, and the other thing is, of course, even in the past, with the block size war, thinking about how in the future, like in the past, we had this issue where, in many ways, Bitcoin was on the verge of, really forking in ways that I think would have been, it would be hard to foresee what Bitcoin would be like, if we had, if sort of the large blockers had won that. But there's even something just very practical and potentially even predictable about how Bitcoin security, what will happen with that as, block rewards decline, what happens to miners, what happens to their behavior. So I'm just curious how we see the future security of Bitcoin, 'cause so much of, our reliance on the asset class relies on that. And as we get to mining out all of the Bitcoin that there will ever be, how do we see and predict this the space to evolve as we approach those really interesting metrics and those interesting milestones?
There are many billions of dollars paid to miners today in security fees, and that's, I think, only going up. It's certainly a lower percentage of the market cap, which is appropriate because the asset class has grown, but it's still a lot of money, very significant. Your question is good. Like, what happens after the block rewards are largely not a thing, and really you're relying on transaction fees. Even in transaction fees, there's still significant transaction fee revenue even today. And I think as you imagine the next several years, not to mention several decades it takes to get to a place where we don't have block rewards, the network of Bitcoin users and the transactions on the blockchain, I think, will only increase and explode. And so I expect those transaction fees to only increase and explode. And so that'll be, I think, continue to be really, really powerful and attractive for miners. And then the other piece is, I think there will be a market equilibrium, right? Like, if there isn't enough transaction fees to reward the miners, then the market will adjust and adapt. And it's a decentralized system. And I think we believe that this decentralized system has weathered challenges very, very successfully and will continue to weather challenges very successfully. And a lot of the miners and a lot of people in the system are very invested in the system. So I believe that they'll continue to try to keep it highly, highly secure. And so I think that's something certainly that people should think about and watch out for. But I think one way to, one thing that some folks have said is over time, as block rewards decline, transaction fees will get more and more expensive. But that's okay, because over that time period, second layer solutions will also pop up. That'll make small transactions economically feasible and fast. And the base layer will be much more for larger transactions with more expensive fees that is still sufficient to compensate the miners. I think that's super interesting. It's kind of like, the Fedwire system in fiat is slow and clunky and very, very expensive. Yep. But not many people are transacting by Fedwire every day. They're doing, second layer Visa or ACH or other things. And so I can imagine the same future.
Yeah, that's definitely a good point. I'm really excited to see how Lightning and things like that are going to shape up and obviously making this a much more mature asset class. There is an explosion of entrepreneurial activity in the space. People talk about DeFi, people talk about, a bunch of, a lot of things in layer 2 across a variety of, coins. There's NFTs, obviously, which have captured the attention of even mainstream media, which has been surprising. And then there's boring stuff like custody, which is still a hard problem. And, we're seeing companies like PayPal make moves into the space. Where do we think, and there's also just this very wide availability of capital due to, all of the things that, as we were talking about earlier, our central bank in the United States is doing. When you look at the entrepreneurial landscape, what are some of the most exciting places that you're seeing, both the obvious and maybe even the non-obvious, where you think, oh, this is, where, there's just so much demand and in the next year or two, we're going to see an explosion of activity in the space. I'm curious, what are the areas you're most interested in on that front?
Sure. A lot of the things you mentioned are fascinating. They're not things that we focus on at NYDIG, but like, DeFi, NFTs, really, really interesting, and kind of an illustration of what I talked about earlier about the creativity of humans who take a tool and take a technology and they just come up with these incredible applications. And I don't know if NFTs will continue to be a thing or which DeFi things will ultimately survive, but I think the technology and the experimentation and the creativity is fascinating, and we certainly keep an eye on all of that. Within the space that we know a little bit better, you mentioned, I think Lightning and the second layer solutions is fascinating. They're doing really, really interesting, incredible work. And as much as people talk about Bitcoin really being a store of value and really, it really is an incredible store of value, I think, Lightning has the potential to really drive payments and payment rails, especially internationally, and thinking about FX and thinking about microtransactions and thinking about the degree of empowerment you can provide to the billions of people around the world who are unbanked and don't have access to traditional financial systems or stable financial systems, which we don't think about in the US. I think that's just wonderful and fascinating. The other thing that we think is super interesting and love, and we'll have some announcements in the future, is thinking about traditional companies, like non-Bitcoin companies, starting to offer Bitcoin products and services. And I was thinking, again, sort of back to the internet, like there's a point when, people wanted to become internet companies and like .com companies. And now it's almost silly. Like everybody is an internet company or dot com company, right? Like they all have an internet presence. They all use the internet and everything. And so there's a possibility that the future is not just like, oh, you're a Bitcoin company, but everybody's a Bitcoin. You have embedded Bitcoin in everything you do, like rewards cards or in your bank account or in your life insurance policy gets paid out or denominated in Bitcoin, or any sort of product can have some Bitcoin or maybe other crypto tangents. So we think that's fascinating too.
You got this unique view given, you've been in the establishment, meaning, you went to Harvard undergrad, you went to Harvard Business School, you were a derivatives trader at Morgan Stanley. But you also mentioned your, childhood in places like China, which is, a very diverse perspective when you think about it in that way. Do you think that perspective shapes how you think about how this, world will evolve? And, what do we think about the international component, particularly the China component, which has been fascinating to see evolve over the course of years? I'd be curious to get your perspective on China, international, and the space.
We talk about as owners, the question of what is money, and it's a question that very few people ask. And I actually remember there was a day in like freshman year of college when somebody asked me that question. I was like, oh, it's money. Like, here, paper bills. I'm like, yes, but it's literally paper bills. Why is it worth anything? Why do you get things from it? Like, oh gosh. And when I think back, and it's funny, in China actually, I think, invented paper money. And there's a really interesting history. And my province actually was a big banking province back in the day. So it's exchanging like gold in exchange for these paper bills, silver in exchange for paper bills representing that silver. But I think paper currency was first used in China as early as year 1000. But about 400 years later, it was worth something like only a 70th of its original value because it's been inflated so heavily in the late Ming Dynasty. And so they actually banned paper money for 400 years. And then they brought it back. But it's so interesting to think about that cycle of like, yep, we've done this before. Like we've had hyperinflation before. And then, in the world in the past 100 years, outside of the US, which we've been very fortunate again, but there's been 56 instances of hyperinflation around the world. It's like every other year, somebody has lost, some country has lost their entire, store of value because of hyperinflation, which is crazy. And so when you think about the power of something like Bitcoin, I do think it's very international. I do think it is very powerful and sort of goes back to a fundamental human desire to say, hey, I worked really hard today. I want to store the fruits of my labor in something that will allow me to consume later. And that's very, very important.
That's a wonderful point. And it's amazing. I think in America, we're lucky to have, as Americans, lucky to have a central bank that, and a country that, basically operates the world's reserve currency, the US dollar, at least the world's reserve currency today. I was looking back at, some research and looking at, when, of course, the United Kingdom, when the sun never set on the British Empire and the pound was a reserve currency, but looking at not just the British pound, but also prior examples of this, it's amazing how much the value that people had in the country that were, of course, based in that currency. Once a country loses its reserve currency status, that currency tends to depreciate dramatically. And I don't think anyone's calling the end of U.S. dollars reserve currency status, but of course there are potential warning signs. And if that were the case, it's really interesting and actually frightening in a lot of ways to think about what could transpire if that were the case, and what you would want to hold, right? It's hard to dig up your backyard and put physical gold down there, but it's certainly a lot easier to remember a few phrases for your private key, that you store. So it'd be interesting to see what would happen.
100%. That's a great historical framing of sort of what happened to the pound, and like you're right. Who knows what's going to happen to the dollar? But at least it seems worth hedging a little bit.
think that's a wonderful way to think about it. So Bitcoin ETF, obviously, NYDIG's been making, well, a lot of moves that have been very exciting, right? I mean, I think, working with traditional investment banks and, Bitcoin ETF on the horizon. Anything you want to talk about there, or anything you can talk about there, as it relates to the future?
Not a lot. We have files for a Bitcoin ETF. We think that would be a really interesting product for investors. Just waiting, like everyone else.
It's very exciting. I think the whole industry is waiting, actually, and in many ways, cheering you on.
Yeah, and on the flip side, yes, kind of waiting, but there's also a lot of interesting activity outside of ETFs, so we're not sitting around. I think our private funds have been extremely popular. We've lowered the fees dramatically, really trying to vanguardize the industry. Nice. We're doing direct integrations with people, so it's a lot of different avenues in the future to invest in Bitcoin.
I think just ending on perhaps regulatory concerns, right? Long term, I think all of us are questioning where this is going to go. I mean, there's a lot of views about, tons of views about what might happen on the regulatory side. Do you have any input or thoughts on how cryptocurrency, Bitcoin, and just the blockchain technology overall, how will we fare under regulation in the coming, months and years and beyond?
I don't have a crystal ball. Ultimately, I think we, as a firm, NYDIG, Stone Ridge, we generally take the position of engaging with regulators and sort of sharing the latest about the market and data and interest. And so hopefully that information sharing will be useful. I think, there are people in the Bitcoin community who think that any sort of regulation or any sort of AML KYC requirements or anything like that is very against the ethos of Bitcoin. But we think that honestly, having responsible regulation is helpful for the broader adoption of Bitcoin. So we think responsible regulation makes sense. So happy to continue to engage with regulators on that.
We've touched on so many topics, and it's been amazing to get your insight as someone so active in this emerging space. Anything else you want to perhaps add for our listeners?
I feel like I've personally come a long way in my Bitcoin journey, but it's it's such an exciting space, and there's so much development and maturation, and just it's a great time to be in this space and to learn about it. And I know, I even when I talk to my friends and family, sometimes they'll say, gosh, there's so many terms and cold custody and hot wallet, and how do I think about that? And really the goal is, I think more and more companies, us included, are trying to make Bitcoin not just secure, but easy to access and delivered in a way that people trust and understand. So I think there's a bright future there.
Well, thank you so much, Yen, for this incredibly enlightening discussion. And it's really good to catch up with an old friend and, just have a chat, this time just on air instead of just in private. I'm very excited to see what NYDIG and you do, and not just in the coming months, but in the coming years, in the long run. Thank you so much for like I said, this incredible discussion. So
yeah, thanks for bringing me on, and thanks for being, a leader in the Bitcoin and blockchain space. You certainly taught me a lot too. And I'm going to be coming to you with more questions about NFTs and all kinds of interesting things.
I can't wait to share. That'll be an amazing discussion as well. Thanks so much. And we'll see you next time. Thank you.
All right. See you. Bye-bye.
Do